Traditionally, a 401k is invested in a mix of stocks and bonds.
The classic portfolio would be 60% stocks, 40% bonds. A lot of people are invested in what's called a target date fund. So basically, you kind of pick the fund with the retirement date closest to when you think you're going to retire. I think I'm in like a 2055 fund. I'm in my late 30s. Right now, that fund is almost entirely in stocks. And as I get closer to retirement, that fund will shift into bonds because bonds are perceived to be safer. And there are folks who say, no, actually, like private equity is a totally valid and legitimate option as well that just hasn't been offered so far. They would like to see essentially my 2055 target date fund take a slice out of stocks and bonds and instead put it into private equity funds. Generally, when you're investing in a private equity fund, you're handing over a chunk of change to that firm for 10 years. You're saying, I'm going to give you a check for $100 million to invest in your latest fund, and you're going to go out and buy companies, turn them around, and then hopefully, ideally, sell them at a profit sometime in the next 5 to 10 years. In the meantime, I don't expect to get my money back.
But for investors, being exposed to private equity comes with risks.
There's a chance it might go bankrupt. There's a chance this turnaround plan or this sort of value creation plan you have might not work out. They're just sort of perceived as a higher risk, higher return investment.
This is The Big Take from Bloomberg News. I'm Sarah Holder. Today on the show, private equity wants in on Americans' retirement plans. What's behind PE's play for the 401k? How likely is it to work? And what would it mean for your savings?